Welcome everyone to the CFO Swinger Watch Report technical analysis video for the short holiday week of December 23rd through 27th. This is officially the last week of December before we turn over a new leaf towards 2025. We have done and achieved so much this year as a trading team and community, so I would like to congratulate everyone who partook in this journey. Now, since this short week will be full of holiday cheer and joy, I would like to continue what I did during the short trading week of Thanksgiving, but with a slight twist. So again, no full report this week, but I will have two different videos, including this one, for you guys this week. So first, this video will talk about the overall state of the markets along with our swing trade ideas for the week, while the second one will talk about 4 different tickers and more that you guys need to have on your watch lists going into 2025. And that second video will be coming out on Wednesday after market hours, so please make sure to watch out for it. Alright, with that, let's get into the markets. So first, SPY here definitely has a lot more room to run. If you guys didn't watch last Thursday's live stream where I nailed exactly where the markets will pivot. Again, I nailed it exactly where the markets will pivot. I highly recommend you guys to watch it. I will have the link in the description box down below. So basically, we saw the price retesting and pivoting off of that $579 to $578 area after it slightly peaked below that $578 whole number level. And once that occurred during pre-market hours on Friday, it was game on for the bulls as the markets ran to the upside from open all the way up into the close. And on top of that, the price blew past this previous all-time high level of $585 that I previously talked about, because that was where we had that very short-lived, short-term bearish moment when the price rejected from that all-time high resistance level and broke below this massive macro rising wedge I harped about for weeks. And so this quick move back over $585 tells me that there is some bullishness behind Friday's move. Now, that's great and all, but what should we be expecting this short trading week? So first off, let's take a close look at the daily 50 SMA, which is my dark blue line right here. So we already talked extensively about how the price has really been defended at this area by buyers, as seen here, over here, and over here. So I really won't go into that as I did in previous videos. But I would like to concentrate on how the price closed right at the daily 50 SMA last Friday. In fact, the 50 SMA closed at $591.34, which you guys can see here, right here on this dark blue number, while the closing price was $591.15 last Friday. So that's only a difference of a couple of cents. And this is something that I am watching closely tomorrow, because the price is just sitting right at this crucial area of SMA support. This is not even a short-term SMA support, it's a very long-term SMA support. It's literally a do or die moment right now that can either end badly for the bears or the bulls. But rather than being all 50-50 about it, we can actually see what we can expect this short trading week. So with OPEX last Friday, we had a nice surge in volume on the daily time frame as seen here. But let's completely disregard that for a second. Since the markets have plunged so rapidly and quickly, the price just simply had to bounce away from oversold conditions whether or not the volume accommodated such a pivot and a rise. Plus, when we usually have a monthly OPEX, or when we lead into a monthly OPEX, we see a small window of weakness, but with Powell's very, very hawkish comments during his news conference last week, that window of weakness was smacked wide open. But with OPEX out of the way now, we have a small window of strength, relative strength, that could be taken advantage of by the bulls. Now, let's see one other major reason why that could be the case. Let's go to the VIX. Okay. If you guys were following me in the Discord, you guys know that I was short the VIX. I specifically did not want market vol to stay elevated for too long, and I really wanted it to go back down to the value of 20 or the value of 18 ideally. Now, seen last Friday, the value did drop to 18 and closed slightly above it. Now, this is great news for the bull camp because we are seeing elevated market vol being crushed heading into a very short trading week. And that means that we can usually slide up higher on low volume in the overall markets. And as the VIX continues to move lower, we can possibly see that 18 value becoming a 16 value. So if this occurs, the last remnants of a potential Santa Claus rally may come back and we can start to drift higher from Christmas Eve, which will be a short trading day, mind you, all the way up into the very first few trading days of January. So with all of this in mind, let's go over the 2 swing trade ideas that I have for you all this week. First, we have OKLO or OKLO. So this company is in the same camp as the previously given swing trade idea, ticker symbol SMR, which happened to be a very, very successful swing trade idea. So this is when the breakout occurred when I went in, and obviously it continued to move up higher and higher and higher. So yes, that's right. OKLO is also a big part of the new current hype and theme in the nuclear industry. Now, I won't get into the details of the company and its innovative nuclear technology. You guys can read into that directly from its company website. A simple Google search will lead you to that direction. Now, the reason why I chose this name is that it just looks perfect from a technical angle this trading week. First, I need to mention the daily 50 SMA once more. So the daily 50 SMA has been continuously rising after its meteoric rise and stratospheric price action and momentum, and during the current consolidation that the price is in, which again began back in late October, has finally allowed the daily 50 SMA, this dark blue line, to catch up to the price. Now, for the last 2 weeks or so, the price has been attempting to continue to stay and stick near or at least above the daily 50 SMA. Now, what was very, very important about last week's price action is that if you see here from last Wednesday, we had a nice flush from a rejection at this $23 whole number resistance level, and ultimately the price closed below the daily 50 SMA, which was new, but it also closed way below its daily 10, this red line, and daily 21, this light blue line, SMAs. But it's the next day after that really mattered, because on this small, tight inside daily candlestick, the price was able to close back over the daily 10, the daily 21, and the daily 50 SMA. And this close over all three SMAs was not just a single day or a fluke, because the very next day we had confirmation that the price or the bulls wanted the price to stay over all three major SMAs, as last Friday we had a nice push up higher and eventually we broke past and over the previous high of the day, which was at $21.85, and the price nearly retested with this $23 horizontal level. Now, what's also interesting is that the price is now consistently staying back over this daily 50 SMA, which could indicate that this consolidation that began at the end of October could be ending. And what could that mean? Well, with this current consolidation, if you take a look on the weekly time frame now, we have been making a very, very nice constructive bull flag. So that initial stratospheric rise to the top is our flagpole, and then the consolidation that has been occurring since October has now been formed into a nice flag. So when we add up the flagpole and flag together, we have a very nice bull flag. Now, if you go back on the daily time frame, we are specifically looking for a complete breakout out of this bull flag to the upside once the price is able to get back over this horizontal resistance level at $23. But that's not the only thing that the price has to get over. It needs to get back over this descending resistance trendline, which makes up a majority of that flag of this overall bull flag chart pattern. And that is the reason why I gave you guys a long over entry point at $23.10 for a full confirmed breakout entry point, because by the time that we're at 23.10, we should be seeing an increase in daily volume or intraday volume, and the price should be back over this $23 resistance level and this descending resistance trend line. Now, one last thing, the price most definitely has to hold over this major psychological whole number level of $20 this week, because if it loses this whole number support level, well, that means the price is back down its daily 50 SMA, and it will be below its daily 21 SMA as well, and it will have an increased risk of potentially losing its daily 10 SMA as well. All right, so with that, let's go to the second and last swing trade idea for this week. NVIDIA. All right. So NVIDIA has been holding up very, very well. Now, before we get anywhere, okay, let me actually hide my drawings here. Okay, so compared to OKLO or OKLO, NVDA or NVIDIA is currently sitting below its daily 50 SMA. And what's interesting about this is that NVIDIA, even though it has lost its daily 50 SMA, it has been relatively strong. And why do I say that? Well, the price really hasn't made a very quick flush to the downside when we usually do see other stocks losing their daily 50 SMA. And rather than seeing a very quick flush and a continued move away to the downside from the daily 50 SMA, NVIDIA has actually begun to consolidate. And so if I bring back my technical analysis here, you can kind of see why the price has been consolidating even though it has lost its long-term daily 50 SMA. And on top of that, the daily 10 and the daily 21 SMAs are currently acting as an area of SMA resistance, furthering the potential sell-off that this name could face. But again, this name has not seen that big flush to the downside. And so if you take a look at last week's price action, especially around its low of the days on any single trading day from last week, we see that the price has come back down at a very, very important level, which was the $128 whole number level. That was also a previous very, very important, significant breakout level back in October, very, very early October. So as seen here on this orange arrow, this was the day when the price decided to finally break out from its massive, very, very massive macro wedge chart pattern or symmetrical triangle chart pattern, which again, those are both synonymous names. They're both pointing towards a neutral chart pattern because it is a neutral chart pattern where the price can either break to the upside or to the downside. So in this case, NVIDIA ultimately chose to break over it to the upside. Now, the reason being that it's so important is that, well, this level, a previous resistance level that was sitting right at this macro, very big wedge chart pattern, has now been turned into a new level of support for all of last week. And in fact, if we take a look at last Friday's candlestick, we have a very, very nice bullish engulfing candlestick that could potentially point towards a reversal to the upside. And again, it's a reversal because, yes, NVIDIA has been making lower lows and lower highs, which is a textbook description of a downtrend. Now, thanks to this bullish engulfing candlestick, the price has been able to close back over this declining daily 10 SMA, this red line, and it has gotten closer to its declining daily 21 SMA. So, as the price has been making this descending downside trend, it has also created itself a very nice falling wedge, right? So again, this is the complete opposite chart pattern of, let's say, a rising wedge that you guys just saw on SPY, right? And so this falling wedge here is a bullish chart pattern, not like the rising wedge, which is a bearish chart pattern. And so if the price is able to peak over and see a continued breakout back up higher for a reversal, a full reversal for a new upside trend, then our entry point is very, very simple for this week. So I've given you guys a long over entry point at 135.20 or simply a long entry point over the previous high of the day. And so that was last Friday's high. And so if you take a look here, last Friday's high was at 135.28. So again, if you simply want a more confirmed, continued reversal back to the upside entry point, then you guys can just simply wait for the price to break over the previous high of the day, sitting at 135.28, or you can get a slightly earlier entry point over 135.20. Again, it's just 8 cents away or below the previous high of the day. So again, if you guys want to choose this one or this one, it doesn't really matter, right? As long as you guys can get a nice entry point over 135.20 or the previous high of the day. Now, just like what we saw with OKLO and its $20 support level, NVIDIA also has a hard line in the sand level sitting at $132, right? So if the price breaks below this level, then the price is going to be right back to its shenanigans of sticking close and conforming to the parameters set up by this falling wedge, which is basically this descending resistance trend line and this descending support trend line. And I do not want to see another retest of 128. So we need to hold this $132 level before we see yet another retest of 128, which will give bears more confirmation and more power and more momentum to try to see the price break below 128 and eventually flush to the downside. And again, why would the price flush to the downside if it broke below 128? Well, again, this is a very, very, very important previous breakout level that we saw back in early October, where last week we have completely flipped it to a new level of support. So again, we need to hold this level of support if we do break below 132. But again, ideally on a very short trading week like this, I would love to see low volume upholding this 132 whole number level of support so that we can at least pivot away from it and continue to try an upside reversal and potentially go back to a new trend to the upside with higher highs and higher lows. All right, so that is it for this video. If this technical analysis video was insightful, make sure you leave a like down below. And if you aren't subscribed yet, make sure you hit that subscribe button as well. Now, if you're watching this video when it just became public and you want to watch this video a day earlier when it's private, all you need to do is become a part of the many, many readers of the CFO Swinger Watch Report and also become a member of the private CFO Discord community. You can get 50% off for your first 30 days. It's a first come, first served basis. So all you need to do is DM me on Instagram at chartsfocus1 to claim your spot. And again, the link for the subscription for the report is down below in the description box. So all you need to do is look out for it. All right, so good luck. I'll see you all tomorrow morning and happy holidays.